Want to know a better way for everyday Canadians to start investing? Hey guys, it's Adrian here, the Canadian in a t-shirt. And today I'll be breaking down what is an ETF and why ETFs are a great way to diversify your portfolio, especially for beginners. An ETF is an exchange-traded fund. It's a collection of stocks and bonds all packaged together, and it's traded on the stock exchange. Hence the name. When you buy a stock, you're buying a unit of ownership of one single company. But when you buy an ETF, you're buying a little piece of hundreds of companies all at once. You've heard the saying, don't put all your eggs in one basket. Well, ETFs can help solve this problem since you can be diversified across multiple companies and multiple sectors. I'm happy to announce that this is my second sponsored video ever, thanks to BMO ETFs. I've been a fan of BMO for years, and I've talked about their ETFs many times on this channel for free, so I'm happy to say that this time, I'm getting paid. I'll include the official disclaimer in the box below, and thank you to BMO ETFs for sponsoring this video. I do appreciate it. Investing with ETFs comes with a host of benefits, whether you're just getting started or if you've been investing for years. They are easier to manage than individual stocks. ETFs come with built-in diversification. Instead of researching and analyzing multiple stocks across the sectors, meaning financials, telecoms, utilities, energy companies, real estate, etc., and then manually buying these individual stocks, you can just buy one or two ETFs that contain all of the sectors. Plus, ETFs usually take care of rebalancing for you. Let's say you want to maintain 20% of your portfolio into bank stocks and 20% into energy. If bank stocks drop and energy shoots up, that will throw off your sector weighting. So you'd have to manually sell some energy stocks and buy more bank stocks to keep this 20-20 split. Many ETFs will rebalance this for you, no work required on your end. ETFs also have a low barrier to entry. Some of the most popular blue chip stocks out there have very expensive share price, and with most brokers, you can't buy a fraction of a share. So if you want to buy Nvidia stock, you'll need at least $400 just to buy one single share. But with ETFs, you can buy fractions of a stock. If you buy an ETF like ZSP, it will only cost you $65, and now you'll own a piece of Nvidia, Microsoft, Google, Apple, and 500 of the largest US companies. ETFs make it easier to get started, even with smaller sums of money. Even better, ETFs are usually more cost-effective than mutual funds since they charge lower management fees. So why choose BMO ETFs? For one, they're Canadian, so they understand what Canadians are looking for when it comes to investing goals and tax implications. And they have a huge variety of funds to choose from general broad market index funds to more specialized portfolios focusing on one particular industry or environmentally sustainable companies. The options are endless. If you see an ETF that starts with the letter Z, it's probably a BMO ETF. And so you know that you'll be getting a great investment product at competitive fees. Let's take a look at some of my favorite ETFs that I've invested in over the years, starting with ZRE. This is the BMO Equal Weights REIT ETF. This is a real estate focused ETF holding 22 REITs, or real estate investment trusts. These are companies that own hundreds of homes, offices, and commercial property and rents them out for a profit. So you, as an investor, get to collect a portion of that monthly rent as distributions. Right now, it's paying an annual yield about 5%. As the name suggests, this fund is equally weighted. Each REIT makes up around 4 to 5% of the total fund, so it's well diversified across the Canadian real estate market without being dominated by one or two big players. ETFs aren't only for stocks, you can also buy bond ETFs like ZAG. This is an ETF that contains hundreds of government and corporate bonds, and you get to collect the interest income from all of them. I rarely buy individual bonds. It can get tricky since you have to consider the maturity date and the credit rating for each one. Buying a diversified mix of bonds with an ETF is far easier. You can also buy an all-in-one ETF like ZEQT. This is an ETF that contains multiple ETFs. It's a comprehensive fund that covers all of your bases with industry and geographic diversification. With this ETF, you'll be invested in the US market, Canadian market, and international and emerging markets. Plus, you'll get exposure to the largest companies as well as the small cap, mid cap companies. These all-in-one ETFs can be a great choice if you're looking for a passive, hands-off approach to investing. So there you have it. Those are the basics that you need to know to start investing with ETFs. Thank you once again to BMO for sponsoring this video, and make sure to check out bmoetfs.com to learn more and find the right investment for you. I'll include links to everything in the description box below. Thanks everyone, and I'll see you guys on the next episode of The Canadian in a T-Shirt. Bye guys.